This is how to use a killer strategy that will blow up your trading. Watch closely because the top traders, they simplify their trading, they nail down on one strategy, and that allows them to be full-time and be very, very, very profitable. Yes, the next trade could make you a lot of money, but what you don't want to do is waste your time. Just like many of you clicking and watching this video, I've been in and out of trading for around about 7 years, from strategy to strategy, asset to asset, quit, then came back, quit, then came back. But over the last 2 years, I've been full time. And what's allowed me to go full time is I stuck with one strategy. Very, very simple, basic strategy. Now, if you've watched this channel many, many times before, or you're in our Discord or our community, then you will know that my strategy is very, very simple. But why do still people struggle with that? Now, that is for a different video, and that is down to mindset. But in today's video, I want to break down what I've been doing for around about 700 days now, day in, day out, with myself and the community, every single day on those charts to take our trading to the next level. So the strategy that we use in the 10 trading and the 10 wealth group is a Fibonacci retracement. Yes, we have other confluences in relation to our levels, but that's our main trigger. So what I'm going to do in this video, I'm going to break down very, very briefly, just looking at the Fibonacci level, how you could just use the Fibonacci level to enter trades, be patient, and still be profitable. Even if you used no other confluences, you will see on the screen what I'm just about to show you, how you could just literally enter off a Fibonacci retracement. So as you can see on the screen now, I'm on the Coinbase BTC USD chart. And as you can see, I'm on the 1 hour term time frame. I've got no lines, I've got no indicators, I don't know my levels, etc. Nothing like that. Now, as you can see, I'll just show you a few things. We've been ranging, as you can see from here, and BTC likes to range like most assets, but that's great for the way that we want to trade, because what we're looking for is we're looking for Fibonacci retracements once we have any sort of wicks or candles or breaks. So you can see that we ranged here, we range here, range here, range here, range here, etc. So from our point of view, that's absolutely excellent. So what I'm going to do, I'm going to zoom into a piece of price action. I'm not going to use any other indicator except for a Fibonacci retracement. And you're going to be going, no way can it be that easy. Now, there's a lot of psychology involved away from that, but strategies are very, very simple. Why do you think that so many people fail if the strategies are proven and there's so many different strategies? That is down to the fact that the psychology of the game. And again, if you want to know more about that, then stick around in for the next videos and the videos that are coming in 2024. But what we've got over here is very, very simple. Once I create a high, and you can see just here that I've now created a high, this is going to be my high. I'm then going to wait for us to create a new low. Okay. Now you could use this one, but then again, we've not broken any structure. So we're not going to use that one. Okay. We're going to use this one just here. So that's then going to be my 1 hour swing high. This is then going to be my 1 hour swing low. So as you can see, high and a low. And if I zoom in here for you a little bit more, you can see. So what I'm waiting for is I'm waiting for a retracement. I'm looking for a retest. Now, what you've got on many other way of the strategies, you've got order blocks in here, you've got SMCs, smart money concepts, whatever it may be, okay? But a lot of the time, they all end up being the same way of trading, just different names and different terminology, and some try and sound cleverer than others. But what we need to do is simplify them. Okay, we don't need a bachelor's degree. We don't need some PhD, etc., things like that when it comes to trading. We need to keep it simple because it's hard enough as it is mentally and being focused when it comes to trading. So what we're looking for is a retracement in our Fibonacci level. So the second one down, I'm going to click on my Fibonacci level. I'm going to take my Fibonacci level from my swing high to my swing low. You can see just here. And what you can then see is my settings are 618 and a 65. That's the golden pocket up to my 786, which is my golden zone. So what I'm looking for any type of price action within here that would suggest that we are going to retrace and then come back down. That's what I'm looking for. Initially, I'm waiting for the 1 hour swing high and the 1 hour swing low. You can do this on a 15-minute, you can do it on a 4 hour, you could even do it on a daily. But on a daily and a 4 hour, it's going to take a lot longer. Now, if you're swing trading, absolutely perfect. But if you're looking to get in and out day trading, then the 1 hour, even more so the 15-minute is going to be for you. So once we then come up to that area, we're looking for a reaction. Now I'm on the 1 hour term time frame. I'm going to keep it on the 1 hour term time frame to keep it very, very simple. So if I start to zoom in just here, you can start to see that I'm not going to jump in straight away on this candle. And the reason being is we've shown some volume and we've gone straight through the golden pocket zone. So it doesn't make sense for me to get involved there. What I'm looking for, and I'm looking for some sort of rejection. So once we have this second spike here, you could see that that was a trap to get people long, and we closed just below, if not on the 786. That would be your high risk entry. The next entry would be once we come back down here and we've bounced off here, now we're looking here. That would be our safer entry. So you have two entries. You can go aggressive, which is just here, or you can go less aggressive, which is just here. Okay, that's all that you are waiting for. You're not looking for nothing else. You're then going to ask me, where do I put my stop loss? So if you take the aggressive entry, your stop loss is going to go above where the previous wick was, because that's where the liquidity is sitting. So we could get a random spike up to there, as we know, to grab that liquidity on BTC. This one, as you can see, goes all the way down, continues. Now, if you're looking for a less aggressive, you're then waiting for this movement here, and your stop loss is going to go above the previous wick, because that's where the liquidity is. You don't really want it up here. That's far, far too high, but you want it just above the previous wick at this moment in time. So let's then move on to another example. Let's get rid of all this on the screen, etc. And then let's move on to further on down here. So what am I looking for now? I then created a new low just here. I've got this high and I've got this low here. So let's change these and let's throw this over to here. So now that we've got a new high on the 1 hour and we've broken structure, and now that we've got a new low. So I'm going to do the same exact way of pulling my Fibonacci to see if we get an entry. I'm going to grab my Fibonacci. I'm going to take it from the high to the low. And as you can see here, we go into the golden pocket. We tap just above the 786 once again, and then we come back to the downside, as you can see just here. And you're looking for a continuation of a move to the downside. That's what you're looking at, as you can see. Now, you don't get a new low here, which obviously is for another video, but you can see you still get a nice move back to the downside. You're looking for that continuation. Now, there is ways to look for the continuation to the upside, and I'll show you that as well on a Fibonacci retracement strategy. So if we go to this, and what are we looking for? We're looking for the same thing. We take it from the high to the low, and then we're waiting for any sort of price action within that zone. And you can clearly see that even if you was to just enter on this first candle and you went on the close and it has to be above there, then you would come down, and that is a 2-to-1 on your trade. You can see just there. So just by purely using your Fibonacci levels, you can start to see exactly what I mean. Now, I'm also going to show you exactly if you wanted to go long in the same piece of price action. I've got my swing high and I've got my swing low. But what I want to do is I'm looking now to see if I can catch a long opportunity. So we've done this down here. We've broken down. We're broken up. I'm looking for some sort of retest to see if we can go back to the upside. Okay, that's what I'm looking for. And as you can see, just on this piece of price action just here, we get a liquidity grab and we move straight back up, but then we start to roll over. But if you're looking for a 15-minute or a 1 hour entry to get yourself involved, this would be called a liquidity grab. Now, Fibonacci levels are perfect for liquidity grabs. I'm going to show you exactly what happens. We're going to take it from the last low to the last high. And what do we get? We get that perfect liquidity grab in here now. Now, what you've got is your candle doesn't close till here. You've only got a little bit of room to move to the upside. So that's a different way of trading, but I just want to show you again how it respects the Fibonacci levels. I personally would not do that on the 1 hour term time frame. We do that in our community, and that's why I teach on the 15-minute time frame. So let's see if we can find any other examples within this chart. So as you see here now, even in the same piece of price action, we created our low at the bottom. You can see the red dot, and then we created a high. What this did show us then is that we took out this high, which is a change of character and a break of structure. So now we've got a new 1 hour swing high. As you can see, we've closed above these swings as well. So we're looking for a pullback, for a continuation, for a move to the upside. If you get your Fibonacci level, you can take it from the wicks, or you can take it from the candle close. Take it from the candle close on this one. You take it from the candle close up to your 1 hour high. And as you can see, to the dollar, we get into that golden pocket. Now, again, where would your stop loss go on this one? You're going to have a look at where was the last piece of liquidity in relation to your stop loss. We're going for a long opportunity. We're going to go for a long. We're going to go there. We need to be coming down to here. For me personally, you need to be coming down to there, and we ride that one up. And you get a 3R on that trade, purely looking at the data to the left to see where the liquidity is and your Fibonacci retracement. And then finally, I want to show you one more. What we've got, you can see we've got this swing high here. And then what have we got? We've got this low before we carry a new low. But again, what do we get? Let's bring our swing high on here on the 1 hour. There's our swing high. There's our swing low. We've broken structure. As you know, talk about breaking structure in the way that we trade. Once we break structure, what are we looking for? We're looking for a retest. We then zoom in. We then get our Fibonacci retracement. We take it from our swing high to our swing low. And what do we get? We get a beautiful tap into the golden pocket, not once, but also twice for a move to the downside for a continuation. That's exactly where we are right now in today's price chart. So just by using the Fibonacci level, you can see once you start to add your confluences, your dailies, your weeklies, your point of controls, your NPOCs, all that, you would then start to get good confluences and conviction for you to enter those trades. So that, my friends, is how you can use a Fibonacci level in a very simple but highly effective way to get in and out of trades. Once you start adding other confluences, like I mentioned earlier, that'll really build your confidence, and then you'll be able to remain patient, you'll be able to remain calm, because that's what's going to allow you to be a successful trader. There is a reason most people fail in this industry. 72% people end the year in the red. Only 1% last in this game longer than 5 years, and only 13% still have any capital after starting trading after 6 months. So you need to be aware that this is a career. It's not a get quick rich scheme, as people would say, but it's a very lucrative and gives you financial and location freedom. If you want to know more, all the links are below. We've got some very good stuff coming in 2024. Join the 10 Wealth Group and the 10 community. Hopefully looking over to a magnificent platform so we can build a big community, and we can make 2024 successful for everybody and yourself. As always, God bless, and I'll see you all in the next one.